Okay, folks, welcome to a little chat Tuesday, the 4th of January 2022. And we have an OPEC meeting coming up today. Delegates getting in around 10 a.m. Things probably not going to kick off till about 1 or 2. But really, good time for us to look at what's going on in the oil market. We're trading on WTI about 76. I'd imagine we're trading Brent something around the 80s marker at the moment. So usually between a $3 and a $10 spread between the two prices is quite normal. So, but really, what I wanted to talk about this morning is spare capacity and surplus, and really what we're talking about. What we're looking at for this OPEC meeting is essentially, the potential for, what is OPEC looking at for the year ahead? How are they accounting for Omicron and other variants that may come in to the picture, and how they may affect global travel and consumption? Of course, transportation accounting for quite about 40% of global energy usage. So really falling spare capacity, as you can see in this article from Reuters going back to October last year. It's really the result of the industry having to draw down the surplus of stocks built up over 2020, early 2020. Demand cut from China. I always quote that one in February by 30%. They cut demand. We had this huge surplus overhang of supply, and in storage, everyone looking to store oil and then sell it months later or a year later for massive profit. That's all fine, and essentially we have rallied from negative $37 WTI up to $76 now. Just coming on a year later, 2 years later now. But the point being is that I think if you're going to be trading oil, it is quite important to realize what is the overall situation. I mean, people always say oil is probably one of the hardest products to trade. I would agree with that. Only from the view that there is a lot of information that you need to be aware of. But once you get a sort of a base case level of understanding, things become a bit easier to understand about oil. So two things here. I'm very bullish on oil, and I have been for a couple of years now, and I think we can continue to be very bullish on oil. Why is that? Okay, well, there are two tools, really main tools, that OPEC use in dampening the volatility and dampening price spikes. Now, you might think and be forgiven for saying, well, do they really dampen the volatility in oil? Because it is an extremely volatile product. There are huge price swings, the spikes, and crazy stuff going on all the time, and that is true. But without the tools that OPEC use, and one of them being spare capacity, and how much they can ramp up or down production, without that, the spikes would be a lot worse. Now, OPEC has taken this position within the global industry. Before that, it was sort of like the Texas Railroad Commission in Texas that would set market pricing, and pricing was not done the way it is done on an open market now, and on spot prices. It was done in a much more contrived and controlled way, albeit it was not effective at dampening the volatility of price, or the volatility on the price of oil. So what I'm getting at is that I'm looking at a bullish case here for oil. Why? Because OPEC is looking at Q1. All right, there being a surplus of only 1.4 million barrels a day. That is a tiny, tiny, tiny amount. The US consumes about 20 million barrels a day. Okay, you've got, I'm not sure my Chinese figures, but you're looking at about probably 10 million, if not a lot more. I'd have to brush up on that. Don't quote me on that. So 1.4 million a day spare surplus is anemic. They may as well, to traders, you could take that as there isn't really a surplus, much of an interesting surplus available worldwide from OPEC producers for Q1. All right, so we know that, right? We'll park that there. Okay. If you then think about that in the context of, well, we have a DOE where we could have a drawdown, a surprise drawdown of like 7 mil, or average would be like a delta of like 2 million negative on an expectation of flat, for example. So the average drawdowns that are beats, or sorry, bigger drawdowns than expected. From my estimation, it would be the average would be about a 2 mil surprise, maybe 3 mil surprise. Okay, but you've only got that 1.4 of latitude of surplus from OPEC. Now, DOE is US. OPEC are mainly looking at Brent grade, right, which trades between $3 and $10 above WTI. Okay, fine. But more to the point is, you know, OPEC at this meeting today are looking to ratify their agreement and consensus to add 400,000 barrels, 400,000 barrels a day, or sorry, a month onto global supply. All right. So this came in November, and was talked about all the way back as far as August. So they're just ratifying at their monthly meetings now to add it on. So this is 400,000 barrels per day. I have the Squawk reminding me of that in my ear. He must be listening to me. So the point being is that is this bearish? A lot of people are going to be thinking, hold on a second. If they're adding 400,000 on this month a day, isn't that really bearish? And the answer is no, it's not actually, because this is fully priced into the market. It's fully priced in. All right. So the market, the gyrations of the market that you've seen for the last 3 months have already priced this in. Okay. What is not priced in is that, number one, they do not do this, or number two, that they modify it in some way, right, to account for Omicron, which has obviously had a huge spread across the world since early December, right? So when we come into these big events, and I mean, it's not a huge event, but an OPEC meeting is significant if you are going to be trading oil. But it's important to realize what is priced in coming into the event, and what is not priced in, or what is probable, what could happen, but is not priced in. Okay, so what's not priced in is that they don't do the 400,000, they just flat don't add it on, or they modify it. They're the two things. So looking past this OPEC meeting, right, you can see on the right hand side of my screen an article here, and for the guys in Discord, I can show you that here. You're seeing essentially the market is getting ready for them to ratify the 400,000 today, and boosting the supply. But the problem is that a lot of these producers are having trouble meeting that additional 400,000 barrels a day target. Now we had that come on. The extra 400,000 came on in December and November. But what we're seeing now is that these markets, these countries are finding it hard to produce at that level. Well, why is that? It's because they have cut their investments in 2020. They cut their 2020, 2021, and 2022 investments in more production. And that in itself is also cuts what I want to talk about, which is spare capacity. So spare capacity is the ability of the market to make up for any shock or shortfall of supply from one area, and then another area can take that burden. So this is why you have Saudi Arabia is called a swing producer, because they have huge spare capacity. If Angola or Libya went offline for a couple of days, well, Saudi Arabia can just say, all right, well, Libya is down, that's 2 million barrels a day offline. All right, well, we can do that. We can put 2 mil on. Hell, do you want 4 million? We can put 4 million on. So they're swing producers. So they will act as that sort of dampener to um, to losses or shut-ins seen anywhere else in the industry. Okay, so that's spare capacity. So governments tend to like for oil companies to have quite a bit of spare capacity. In that if there is a war shock or something, a supply logistics chain shock or war, something happening, that that essentially those oil companies can say, okay, well, don't worry, we can just ramp up production. Albeit it takes quite a while to ramp up that spare capacity utility, but they can bring it back. That they can make up for shortfalls, for example. However, that tool, so that tool of spare capacity, um, is dampened, and we actually have, coming back here, spare capacity. I think we're seeing across the world, spare capacity is about 5.6 billion barrels at the moment, something like that. Just let me reference into this article here. Um, the IEA saying that the spare capacity could fall below 4 million barrels a day. So that's very tight. Um, that if there is a shock of, say, 10 million barrels a day to supply, well, then we're goosed because there's no spare capacity to make up for it there. And guess what happens? Price has to go a lot higher. All right. So I'm going to pop these articles in the Discord, and really well worth a read if you are going to be trading oil and if you are taking medium to long term views on oil. So do be aware of this stuff out here in the market today as we go into the monthly OPEC meeting with regards to the 400,000 barrels a day edition. My view is, looking over back at the charts here. All right, we'll just get this off the screen. We can look at where oil trades right now. And here we are. So essentially this is oil on the daily. Might go out to weekly. Oh, sorry, there we are on the weekly. So yeah, I think we've had a decent push already to kick off the year. Really well, probably from December. Really, you've seen this pullback in here. We've gone from really the pullback to the 66 level. We're now heading up into 77. So we've been pretty much $10 up off of the pullback that we had in November. All right. And, the floor and price is really set on WTI $65.5. And we've been talking about that quite a bit. So I think we can actually get back up here to test on this downtrend at about $83.5. And I think we are going to see 86.80s before long, not too long. I mean, looking at the equities picture across a lot of the oil services companies that I'm involved in and trading, like PAA yesterday, up 5.4 or 5.2%. That's a big day for PAA. A lot of these oil service companies are going crazy now, and I think the reasons why we went so negative in 2020 here, I think are completely, lower prices beget higher prices essentially in these markets. When you get such great value, and you have people buying and holding for better, higher value. So anyway, I've gone on a bit too much, but I'm targeting 86.80s on this. And what is 86.80s? Well, actually, it's off my screen, but this is a 2015 level actually. So it's just off the screen here. And then are we going to do 107 this year? I don't know about that. Potentially, I would put it at a 50% probability right now. So let's see. So just thought that would be interesting for everyone to be in the know of what's going on. Also, if you are in the need of being in the know in the mornings, do check out the daily morning read, which is our daily macro blog put out by Reed Ridwan, who's one of our senior traders, and it's on our blog. Just go to the Duggan Capital website to check that out for free every morning. All right, have a good session, and I'll be talking to the pro traders in the Discord throughout the rest of the day. All right, cheers. Bye.